Accountancy, joint venture accounts. You may refer to my explanation given yesterday, that is 19/4/2021, regarding the method of recording joint venture transactions under separate set of books method. Today I am explaining the same with illustrative problem along with the solution. Illustration problem. Ram and Ravan are carrying on a business as contractors. They jointly take up the work of construction of a building for Mr. Bose at an agreed price of rupees 5 lakhs and rupees 3 lakhs payable in cash and 2 lakhs payable in fully paid shares of a company. A bank account is opened in which Ram and Ravi paid rupees 3 lakhs and rupees 75,000 respectively. The following costs were incurred in completing the construction. A. Salary paid rupees 1 lakh. B. Materials purchased rupees 2 lakhs. C. Materials supplied by Ram from the stock of his own rupees 50,000. Engineer's fees paid by Ravan rupees 10,000. The contract price was duly received. The accounting of the venture were closed. Ram taking up all the shares at an agreed valuation of rupees 1,70,000 and Ravan taking up the unused stock of materials at rupees 15,000. Prepare necessary accounts in the ledger of the venture, assuming that a separate set of books are maintained for this purpose and that the net result of the same is shared by Ram and Ravan in the ratio of 3:2. Now let us see the solution. See, the first transaction is opening of joint bank account. So joint bank account is debited and co-ventures account are credited with the respective deposits made. Then second entry will be payment of expense, that salary paid. So joint venture account is to be debited, joint bank account is to be credited. Then materials are purchased. For this, joint venture account is debited, joint bank account is credited. Now then Ram supplies from his own stock. Joint venture account debit 50,000, Ram account 50,000. Then engineering fees is paid by Ram. For this, joint venture account is debited, Ravan account is credited with 10,000. Then contract is received in cash. So that means cash means received by bank only. Joint account debit 3 lakhs to joint venture account 3 lakhs. Then partly received contract price in shares, For that the entry will be shares account debit 2 lakhs, joint venture account credit 2 lakhs. Then for shares taken up by Ram, debit Ram account with 1,70,000, credit shares account with 1,70,000. That means there is a loss of 30,000 because share value was 2 lakhs, taken up value was 1,70,000. The difference is 30 lakhs. 30,000 represents loss. This loss is to be debited to joint venture. So joint venture account debit 30,000, shares account credit 30,000. Then Raman is taking up the unused stock of materials. For this, debit Raman account 15,000, credit joint venture account 15,000. Then after finding out the profit comes to 1,25,000. That is shared in the ratio of 3:2. So the entry will be joint venture account debit 1,25,000, Ram account credit 75,000, Raman account 50,000. Then after crediting the share of profit and all, the net amount payable to Ram and Raman is settled. For this entry will be Ram account debit 2,55,000, Raman account debit 1,20,000. Credit joint bank account with 3,75,000. This will close the accounts. Note 1. Last two journal entries are to be passed after posting all other journal entries to ledger. Note number 2. Joint venture account is to be closed first. Secondly, joint bank account is to be closed. Now, ledger accounts. From the journal entries we are posting the accounts of joint bank account, joint venture account, Ram account and Raman account. This is only a clerical work, you will be able to understand it. just by going through it. I hope this gives a clear picture as to how the account transactions of joint venture accounted under separate set of method. Thank you.